The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, the first chart that I've posted in here for today is the E-mini S&P from yesterday. We were having some signs that we were going to get a bounce, and we rallied 50 handles. And as you'll notice, the both of those rallies that we had were exactly equal, almost to the exact point. I mean, I think one was 1 point off over the other, but that sets up this ABCD pattern down here near the 1858 level in the S&P. We're trading at 1869 right now. Pre-market, so we'll see if that's going to hold. Now the Dow is going to open down more than 350 points, it looks like. So this is going to be either a really, really, really bad day, or we're going to hold in this area and begin to have some type of a consolidation. Folks, we're in a major bear market. I keep saying that. And as we have these vicious rallies like we had yesterday, 330 points straight up in the Dow, and then you turn around and 2 hours later you're looking at it back unchanged or down, and that's the nature of a very vicious bear market, and that's what we have going on right now. This is not a time to be remiss in protecting your positions for 401ks. I know the market's only down 12%, but let's just add up a few things here that have happened so far this year. First of all, it was the worst day, the first starting day in the history of the stock market. It even beat the 1932 low, which was when the Dow made 41. And that was coming off of a high of 383 back in September of 29. Remember that there's a potential currency war going on out there too, with the Chinese yuan doing what it's doing, and where the dollar's getting hit today with a little bit of short covering going on in the euro. And I believe that's all it is. I think the euro is going to have a whole lot of trouble up around that 111 area. We're trading at 109 and change right now. The market breadth has been bad for months, and it's been telling that. The other one of the strongest seasonals that the market has ever experienced is the fact that the small caps gained, to the large caps, and that's exactly the opposite. The small caps are getting absolutely massacred by looking at the IWM. So that's another one. The transportation index is in an absolute free fall. It's been in a bear market for well over a year and a half. And so that's it. The other thing is the VIX index has not really perked its head up very much. I mean, it's really, been far, far lower than where we were in August the 24th. So there's really no fear in the market as of yet. Whether it's going to come on this particular move or not, I'm not sure. But you want to prepare yourself for something that is going to last a long time, I believe, because of the way that it started. All of the things that we're looking at are there. The long-term patterns, of course, we've been looking at for quite some time. The divergences in the market are quite a bit. So just be sure to protect yourself with these markets. Fortunately, you've got folks in there like Tom O'Brien and Daryl Martin, and especially Basil Chapman. And Basil does a fabulous job on the way up. He does a fabulous job on the way down. We should call Basil. I'll give him the nickname the Elevator Man, because he catches them both ways. Also, Steve Rhodes does a fabulous job with his cycle work and some of his pattern things that are really very, very good. So pay attention here to TFNN, and hopefully you'll lead you to the promised land, because we've got a long way to go here. Bear markets act differently than bull markets. They're harder to trade, mainly because you don't see them very often. Well, you see them when you're looking at particular stocks like CMGI or Priceline or something like that. But in the overall broad index, the last time we had a major correction was back in July of 2011, and we've already we're just coming out of here like a rocket ship, folks, and that's a sign that only it's a reverse rocket ship going to the downside. So we'll see how that works. Now we made new lows in platinum and today, but we're getting a pretty good rally here in the gold so far. We've rallied well over $25 off of our bottom yesterday when we got down to the 61% retracement down there at that 1075 level. The low was 1072, and that held, and then we started to rally. But platinum hasn't quite made new lows yet, but it's come off of 3 drives to a bottom, and it only rallied to a 382 retracement, so that's telling you that it's pretty nasty, and that's just a function of all the commodities that are out there. I mean, you look at iron ore or tin, or it doesn't make any difference. Steel, copper. I mean, well, of course, crude oil. Crude oil hasn't got any friends at all. I'm the only friend that it has, and I'm beginning to lose. I'm beginning to lose the incentive to try to buy this. But actually, what I'm doing in the crude oils, I mentioned yesterday, I'm buying the Brent North Sea crude versus the WTI. If you remember back when oil was 140, the Brent North Sea crude had about a 15% premium, and it always around $10 to $15 a barrel premium because it's a better oil. And yesterday, sometime during the morning, you had a chance to buy Brent at 50 cents. In other words, 50 pips under the WTI. Now that's reversed, and WTI is up about 20 cents more than the Brent right now. And what I'm expecting is the relationship of Brent to increase over the relationship of WTI. And that's a way of trading that. The margin on it is very, very small. My risk is going to be about $1 a barrel, but that's what I'm looking at in here. I like the oil down there today. When Mr. Z was buying it down there, that 29.40 level, 29.35 was the 1.27 expansion. And we'll see what's going on. One of the questions that we're getting today is whether copper is going to go down to the 180 level, and we can certainly see that. That's not that very far away. If you stop and think, just a few weeks ago it was trading at $2.15, and we came down to $1.90 and change. So it dropped 20 cents a pound in a matter of a few weeks. So 20 cents from $1.90 takes you to $1.70. So like John Logan says, markets that go lower continue to go lower, and that's pretty much what's been happening. I don't see a bottoming pattern here in copper, to say the least. The only thing that makes gold interesting here is a potential for the market to have one of those really, really bad days. And we are going to see a day more than 500 points in the Dow, folks. We've been saying that for weeks and weeks and weeks, and it's coming. We'll be right back right after these next few words.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting tfnn.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we've had a request here to take a look at the German DAX index because it is the basically the S&P of Europe. And as you can see, I put a series of charts up. The first one shows the relationship between the S&P 500 and the DAX, and as you can see, that correlation is about 95%. And we made a lower low, of course, in the S&P. Now, if you'll notice the big ABCD pattern that we had on that first chart, we didn't quite make that. And then yesterday we hit the exact ABCD pattern in the DAX, and it had a pretty nice rally of about 300 points. And then today it has given it all back and now making new lows again. And that's another sign that the market is weak. And this is one of the things that we did talk about yesterday, is the fact that these markets they have these quick rallies, and then you blink your eye and you're back down again. And that's a characteristic of a very, very serious bear market, folks. So please protect yourself if you have 401ks. And most of these markets down about 12%. Some of the things that you're in are down a lot more than 12%, and you don't want to have something happen like in 2008 and in 2000 and in 1974, and this is going to be the big one, folks. This is the flying Melinda. You got to be really careful here, mainly because of quantitative diseasing. That's going to be when the history books are written on this, long after this old cowboy is pushing up tulips or daisies, they're going to be talking about it as, wow, why didn't somebody think about that? Well, there are a few people out there. I mean, I'm just a technician. I'm just looking at it from the the drawing the lines of the stuff. But economically, it just doesn't seem right. That's basically the bottom line. Now, we had the same situation occur in the Hang Seng Index. like we had in the market for the DAX. We rallied almost 400 points in the Hang Seng yesterday, and in a matter of about 4 or 5 hours trading today, we went back and we closed below the 1.27 and ABCD pattern. Another reason, that you're looking at something that could be, very, very significant. I'll put that in here so you can take a look at it here in Tiger TV, and you'll see that, we hit that number perfectly on Thursday. The market rallied very strongly and closed at around 19,800, and then it opened about unchanged and went down the whole day, closing at 19,453, which is below the 1.27 level, and that tells us that we're most probably heading down. Now, the sentiment index in the market is someone was kind enough to send me the sentiment index, and it basically is as bad as it was back in 2009 is what this report said. But frankly, folks, that's not what we're seeing in the VIX index. In 2009, the VIX index was trading at almost 90, if you'll remember. And, the VIX index is trading at 25 and change, so, well, it'll be a lot higher today. But that's what, there's totally different. I mean, that's not the same thing. There's no fear in the market, and that's why we could see a really bad day. We've got a holiday here in the United States on Monday, Martin Luther King Day, and so we will be closed. Our guest was supposed to be Bill Meridian on Monday, but he's going to be with us on Tuesday, and so we'll have him as our guest. But we're going to have a few days here where we got Saturday, Sunday, Monday. We got 3 days. Asia will be open and UK will be open, so we're going to have a real interesting, market come here on Tuesday. The way it's looking right now, folks, this could really be a nasty couple days. Now, it might reverse like it did yesterday, because usually when you get a market down that far, you're going to get bargain huntings coming in. But remember, this is Friday in a down week, and it's in the middle of the month, which is one of the worst times, for the market to rally. Remember, the strong rally days of the month are the last 2 days of the month, the last 3 days of the month and the first 2 days of the month. And you saw what happened to the first 2 days of the month this year with the worst start that we've ever had. So it's just adding up, more and more to the downside is, primarily, what you're looking at. Make sure that you own some silver rounds, those silver coins that we talk about all the time, the 1 ounce silver coins. I really think that this is something that you should also have, so we'll see. Oh, my goodness, we have a very special guest in the market. Shane, are you there?
I'm here, Larry. How are you?
Hey, thanks for calling in. Folks, this is Shane Smolian, our astrology guy. How are you, buddy?
Good, pretty good. I thought I'd call, and I just heard you on the radio, and I just wanted to give you some thoughts on the planetary aspects here and what's going on with these markets.
Please do. Now, listen, if the music comes in, stay with us because it'll just be a short commercial, but they do want to hear you. So fire away. You got the mic. Go ahead.
Okay, well, basically, we hit that top on the planetary speed index, the one that I sent you. We hit that top on Thursday, and yesterday we had a short covering rally. Now, the problem with these markets is that the Fed comes in at 10:30 every day, and sometimes they put more juice into the market, sometimes they put less. Yesterday, they floated this thing back into a buy. So what we need to watch today is what happens with the Fed, and I'll have that data around 12:45 or 12:30. Now, if they come in and put more juice into this market, it's going to have a little bit of a softer landing, and I think we're going to see 1,800 pretty quick. I think we could see 1,800 today, S&P, but if they don't, then Monday we could look at the possibility of a full-scale market crash. And when I say that, I mean well below 1,800, probably down into the 1,500 or 1,600s on the S&P pretty quickly.
Excuse me, you said 1,500?
I think 1,500 below could be visited pretty quickly, depending on what the Fed does today. So I'll have that data around 12:30 to 12:45. So it really depends upon what happens. Because, for example, yesterday we got that short covering rally right at the open, and the Fed also came in and with their juice, okay, they came in with their purchases and their lending, and that caused it to float a little bit in the day. But depending on what they do today is going to determine how severe this goes down Monday. But I do think today we could see 1,800 pretty quickly.
Okay, that sounds really, really, really interesting. But that would certainly put it into the crash format, because that would be down pretty much like what happened in 1987 when we were down 15% in one day. And that VIX index, I mean, there's no fear out there, so that could certainly happen. And with the market being closed on Monday, this could really be a terrible opening on Tuesday, possibly.
On Tuesday, Tuesday, correct. Tuesday.
Yeah. Mm-hmm.
And we talked about that planetary speed index that, this has downside through the 27th or the 28th. So, we're not out of the woods yet. And this is just the first leg. Remember, we have the rest of the year here. We were talking about 2016 being this is the big year. We put that out in December, that big forecast where we talked, and I sent you the video. There was the two cycles. There was the long-term cycle. Then we talked about the planetary speed index, and everything was converging to this is the year that we're going to have this big meltdown. So it's a dangerous time to be in the market, but we're taking this one trade at a time. So,
all right, my friend. Listen, thanks for calling in, Shen. We really appreciate it.
Thanks, Larry. Have a good day.
You bet.
Okay, bye-bye.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, we're back, folks, and the market is continuing to weaken up. We're making new lows in the futures as we approach the opening, and we're opening right now. So we're going to see, we should make that 1858 level in the S&P. We hit 1860, which is pretty close, so we'll see what's going on. The bond market and the note markets are still very, very strong. The bonds have a 1.618 number up here at the 160 level, and we're trading at 159.11 right now. Anything above 160 would probably mean that the failure that we're going to see here in the S&P below the 1850 level would tell us that we're going to be heading down. Because if we close really badly today, folks, on a Friday before a holiday, boy, that's going to look really bad coming in. I don't know anybody want to own stocks over a long weekend coming into Tuesday. And the thing that we have, going for us is we had, Shane Smolian was on the line and telling us, we have these negative cycles that were out there. So watch the 10:30 time frame here in another hour or so, because that's when the Fed starts to, add reserves, and we get a bounce off of that. That could hold us up here. But longer term, folks, all you have to do is just look at the longer term chart. Well, I'm going to put it up again because I've been putting it up forever. I'm going to continue to put it up. I'll update it this week. But as you can see, this is where we were last Friday. And you'll notice that, we've broken down sharply below the lows of August the 24th in the New York Stock Exchange index. We haven't done it yet in the NASDAQ, but we're close. And we're also not too far away in the S&P. We're only about 30 handles, from doing that. So that means that we would just start, cascading down. And remember, the markets do repeat themselves. We see this, over and over again. So you want to pay attention. But, like the old medical aphorism says, if you hear the sound of hoofbeats, think horses, not zebras. Look for, what the underlying causes of these things are. And as you can see, the global markets across the world, there's not one global market that is up on, that is in good shape. I mean, they're all heading down. So we have a major global recession that we're looking at. They haven't called it that yet, but that's pretty much what you're looking at. Now, one of the stocks that's in the news today is one of our all-time favorites, Goldman Sachs. And as you can see here, we've had a request to take a look at this, but you can see that the ABCD pattern that we have going here in the Goldman Sachs measures down to the 147 and change level, and we're trading at around 161 today in Goldman Sachs. I noticed that they paid a $5 billion fine about one of their unlawful doings. I mean, that's amazing. J.P. Morgan spent $16 billion on fines. I don't know how much the fines have been for Goldman Sachs, but no one goes to jail. This is just that's insane, folks. That's not fair to the rest of the world, but that's just the way the banking is because of the way they fund the money into the elections, and bada bing, bada boom. That's the way it happens. Someone's asked me a question about Nick Leeson. Folks, you might remember him. He was the guy that was responsible for bringing down the Barings Bank back in 95, I believe. I think it was 95, 96 somewhere. But, he was a trader and did extremely well, except that he got over-leveraged in the Nikkei stock indexes and put a huge position on. He was already losing, and then he tripled his position right into a weekend, and then they had a big earthquake, and that's what the market just absolutely. And he actually took the Bradley model. I'll put that up here in just a second, and I'll be happy to put that up for you, Bob. But he was basically leveraged along Ray, and it just literally smacked him down. Okay, we got a call from Massachusetts. Kevin, are you there?
Yes, Larry. How are you today?
Very good. What can I do for you, my friend?
Okay, a couple of questions, and I just want to know, I'm originally born and raised in Canada, where do you think this Canadian dollar is going to bottom out? I know you can't predict. So give me an idea what your feelings are. I know you can't predict the future.
I've been looking at this 142 to 144 level. We had a really big day in the Canadian today. It dropped really dramatically, and I believe we're very, very close. And it's so tied to crude oil. And the whole world is, negative crude oil, and they should be, because it keeps going down in price. But I think that will be the final turn for it. But I've tried several times in the Canadian dollar. Fortunately, I've come out of it okay, because I tried it yesterday. It worked really good for about $500, and the next thing I turned around, I saw I was out of the trade at break even. So, and then it continued to go even lower. So I keep nibbling at it. And today's interesting because we had such a spike. And if we close in the upper part of the range today in the Canadian dollar, we will leave we'll leave one of those hanging man candles, or on the reverse side of it, it would be a shooting star. Then I would be able to look at it. The problem that we have is the fact that we have such negativity going across to all the markets, and really it's just, this is Friday into a holiday, Kevin. This ain't the time to do it, my friend. It's best just to wait and see what happens.
Okay, no problem. What is the all-time low in the Canadian dollar versus the U.S.? Do you have that handy? I don't know.
I believe it's at 65 cents. That's what I believe.
So, yeah. Because when I left Canada, it was around 65 cents.
Yeah.
And that's like 20 years ago.
I believe it's around 65 cents. That's what I think it was. And I'm telling folks family. In fact, we do watch the family stuff, but we are basically, buying Canadian dollars here because of the fact that we think we're at a pretty good value. But that's, just a short term. Well, not a little longer than short term, but I just think it's really close. The same thing with the British pound. I think the British pound down at this 143 level, offers some really good value also.
Okay, thank you. Before you mentioned quantitative easing, I was thinking to myself, listening to you, this is about 5 minutes here, and I go, I wonder if this quantitative easing is going to come back to haunt us. Now,
big time. Yeah.
Now, give me your, and I'm going to hang up, and I'd like to listen to you explain that to me, because I try to explain to people, and they think I'm crazy, and maybe I just not explained it properly, but...
this is the way it was explained to me by someone who went to Harvard. And
okay.
I went to Harvard once, Kevin, but it was for lunch to visit my daughter who went to school there. But basically what quantitative easing means to me is you're paying one credit card off with another.
Okay.
You just keep adding debt. That's basically what it's doing, and that's what the Fed has done. They just keep using their credit card to come in, and basically that's what it looks like to me. And the history will go back, and maybe 50 years from now, whenever it happens to be, and then they'll look at that. That's like what happened in the big crash of 1835 to 1837 when Andrew Jackson was president, and we had a Federal Reserve that went tapioca. It was 170 years ago, but that's what happened. So I hope that helps.
Yeah, no, it's great. I just want to thank you for your time. Take care.
Hey,
Have
thanks
a good day.
for calling in, Kevin.
Goodbye.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender. It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direxion's daily S&P Biotech 3 times bull and bear ETFs. Visit DirexionInvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direxion shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direxion shares. To obtain a prospectus or summary prospectus, please contact Direxion Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks. We've opened in the market. We got down to the 1860 level. We rallied up a quick 15 points. And if we can get above the 1880 level, this might be a pretty good bottoming day. I don't know. The sentiment is really negative. It's not as bad, of course, as March of 2009. I mean, nobody thought the stocks would ever go up at that point, but it is getting pretty bad. But we're very, very oversold, no question about it. The ABCD, measured to 1858. Whether 1860 is close enough, my guess is it probably is. From my perspective, it was. Now, we made lower lows by quite a bit in the Dow Jones. We didn't do that in some of the other indices, so there could be a divergence going on there. The NASDAQ, let me double check the NASDAQ here just to be sure that it's doing the same thing that the Stop and P is doing. Just a second here. Let me take a quick look here. And we'll just grab this up and we'll see if we're doing the same thing. And yes, we did make a slightly lower low. Ooh, boy, we almost made the exact number in the, wow, it's almost rallied 50 NASDAQ points. The number in the NASDAQ was 4112 and 4110, and we got to 4112. 4113. Wow, that's only 3 points, and we've already rallied 50 points. That's a pretty good sign here that we could get in, and we're starting to get a little bit of a rally. Who knows? Maybe these ABCD patterns do work. I don't know. We'll just try something else. If not, we'll go back to the moving averages again, and we'll be looking at point and figure and whatever else we need to look at. But we'll take a look at it. So we'll see what's happening right now. But we've already rallied 50 points in the NASDAQ, and we rallied 17 points in the S&P in the first 15 minutes. Now, we could go back and go below that, of course, but we'll see. We are very oversold. Longer term, folks, it doesn't make any difference. We are going lower. I don't see any reason why we're not going to go lower. And all the factors that I mentioned earlier are there. They're all technical. Like I've said 1,000 times, and I'll say it again, I don't know diddly squat about the fundamentals. All I know is the charts, and we see prices going down. That's what we're looking at. Now, I've had a question about the Australian dollar, and I wanted to bring this up because it's been in a really bear market for quite some time, and we had a pretty good rally here up at the 7,400 level. in early December. Then we made a 786 retracement at that 73.20 level, and now we're trading down below. We're down into the 6,800. We dropped over 500 pips in this, and this is new lows now for the Australian dollar. And so the first resistance or support would be at the 1.27, which would take you down to about 65 Australian dollars to the U.S. dollar. So that's what that's what that looks like. Now, I've had several questions about the Chinese yuan or the renminbi. The problem is, folks, not many of the Forex banks are making large markets in it. I mean, there are some, but it's really hard to get really good quotes, active quotes as near as I can tell. And I have no interest in it until it becomes official, and I think that's going to be out another 8 to 12 months unless they start to make it move a little faster. So we'll see what's going on. Now gold, we went up, hit the 61% retracement of the range that we had, and that's a pretty good pretty good rally up to 1090. Boy, I start to study that stutter. That's a bad sign. 1090, 1092 level. So we'll be able to look at it. Someone's asked me a question about spreads, because I'm looking at a spread here. Well, I'm doing a spread in the crude oil, going long going long Brent, which is the premium oil, and selling WTI West Texas, which is the inferior oil, looking pretty much of what we're watching here. But one of my biggest days that I can ever remember, not so much, well, it was pretty big because it was after my debacle in 1974. I studied for well over a year before I went back into the markets, and I went back into the markets in a spread position. I was long July soybean oil and short December soybean oil because there was going to be we were forecasting there was going to be a big El Nino coming in, and we had a beautiful Gartley pattern in oil, and I was telling everybody that would listen to me to buy July, sell December. And that was for 1975. Yeah, I think it was 75, 76, 75, 76, 76 maybe. Yeah, 76. And anyway, the real critical day came one day on a Friday on the close. The July oil, which I was long, jumped 30 points, and the December dropped 20 points. That was 50 pips in the oil at $6 a pip. That was $300, and the margin on it was only 150. So he made 200% in one day. And of course, and Reuters came out and they said, "Oh, this is going to be corrected again. This will be taken care of on Monday." It was an aberration. And then on Friday, when Monday finally came, the market opened it unchanged. It didn't correct. And at the close, July went up and Dece went down. It continued for 18 days. And that's what brought the old cowboy back into the old business again. Anyway, no North Sea crude is supposedly better than WTI, and the reason is that it used to be selling at a $15 premium to North Sea. That's how I understood it. The gentleman that told me to put this trade on was the fellow who's in the business. That's what he told me. He could be wrong. I probably ought to check it, but I took him at his word because he's pretty sharp, and it started to work now anyway. I don't know if it's going to continue to work, but we'll look at it. But I looked at both of them before I decided to do it, so that was the reason for watching this. So we'll keep an eye on what's going on. So we're having a pretty good rally here. This is good. We've already rallied 20 points off the bottom in the S&P. That's going to be a sign that we've had some support come in here, and hopefully there won't be anything bad really happen until next week. But folks, this thing looks bearish. There's no other way you can look at it. If it looks like a duck, talks like a duck, and quacks like a duck, it probably is not a chicken. So pay attention to it, because these markets have they got a long way to go to the downside when you look at where we are and where we've been and where we're going. That's what it looks like from the cheap seats here in Philadelphia. The fact is, I've only got a couple more days here, and it's back to the ranch, back to our beautiful horse ranch and cattle ranch in Tucson, Arizona, on our 1/4 acre on our 1/4 acre lot. And but we'll be glad to get out of it. We have wonderful weather here, which has been pretty good here. Okay, we are going to. Someone's asked me a question here. What we got here? Okay. I think we have a break coming up here. I'm not so sure, but anyway, we'll look at it. Anyway, we've got a little rally here. Let's just to see what our rally should be now. Okay, we've looked at this stuff. Let's just check our numbers. We came down. We went up to 926 yesterday, right? 928, and then we came down to 960. So the first area of resistance today, folks, will be at 1885. That'll be a 382 retracement back from the move down, the 60 points down that we've had. So watch 1885. We get above that, we got a chance, and maybe be one of those major reversal days. I don't think so, but just watch 1885. That's a key in the S&P futures.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, boys and girls, and I wanted to wish you all a wonderful holiday, of course. And on Tuesday, we're going to have Bill Meridian on from Vienna, Austria, from Cycles Research. And we want to thank Shane Smolian for coming on today. And he's very busy, and it was nice of him to come in, and we'll see how the market unfolds here. We'll see what happens today. Frankly, we got this holiday coming in, and usually on a day before a holiday, the market is positive. It's going to have to take some kind of a miracle to get it to go positive today, but we've seen these miracles occur before. But we want to keep our eye on the low due on the 27th of January. That's when we have a pretty good cycle date. That would set this up really nicely, one big washout, and then we would get one heck of a rally for several weeks, and that's the one that's going to be that's the one that you want to be on board on the way down, because that leg will be down much more than this past leg, and this last leg has been quite a bit to the downside. So we want to keep an eye on that coming into Tuesday when we have it. The market will be open on the Globex for trading, because we're going to be trading in Asia and Europe, but the exchanges themselves will be closed, so we'll have that gap time in there on Tuesday morning. So we'll see what happens with the markets during that time. But we are in a real serious downtrend, as we all can I think we can all realize that now. We certainly had lower highs, lower lows, very bad distribution and breadth and all that stuff, and all the other things that are going on, the similarities between 1974, 2000, 2007, 2015, all of these things are adding up for a really, really negative 2016, and we're only 2 weeks into the year. So that's the main thing. Also, I have one very large complaint. I'm very upset with Pope Francis. He's having Eric Schmidt as a guest, but he won't have me. Isn't that sad? What are you going to do? Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.